Hey, welcome to Wealth Creation Investing's Friday debrief. My name is Matthew Buckley. I'm the Chief Strategist here at WCI, and wow, what a week it was. If you're new to investing, your head probably hurts, and I know you might want some Advil right now. So let me help us break down what exactly happened this week and why and where we're going to go from here. So let's pull up one of our strategic partners brokerage platforms. And folks, one of our strategic brokerage partners is TradeMonster. You can go to trademonster.com/WCI and open a free paper trading account. And you can use some of the rules and charts and everything that I'm going to show you right here. So let's get right to it. The week in review. Wow. Well, last Friday, obviously, on Good Friday, the markets were closed, and of course that's when the government came out with bad unemployment numbers. We only created 120,000 new jobs, and for the past 3 months, we've seen north of 200,000 new jobs created. So the market, as soon as that, heard that news, let's open. This is a chart of the SPY, which gives us kind of a good idea of the overall market. We opened gap down on Monday. So let me just go out a little bit more, go out 10 days so you can actually see the move that happened on Monday. So here's where we closed on Friday. That's where we open on Monday. So obviously not good news. Monday, we had some Fed reports. The Fed chairman spoke. Not really too much happened on Monday, so just kind of drifted up here. After hours on Monday, though, Alcoa, ticker symbol AA, came out with earnings, and they actually blew the door off of earnings. So, but still wasn't enough to convince the market, and the sell-off continued. But we found a bottom here. So sell-off continued at, in this case on the SPY, around the 136 level. And right around Wednesday, had some kind of good news with the Fed vice chairman. Her name is Janet Yellen, more or less saying what the Fed chief has said for a while. Hey, we're going to do whatever it takes to keep this market kind of stable. Well, what's that? That's more, that's the bartender saying, you know what? We're not going to call last call right now, and we're going to do whatever we need to have this party keep going. So the party kept going, kind of the rest of the week there, and right around here, something interesting happened, on Thursday. Well, Thursday after the close, Google came out with earnings. And they were supposed to, forecast was $9.65 earnings per share, or EPS. And the revenue number was supposed to be $8.15 billion. Well, they beat on the earnings per share, $10.08, and they were kind of in line with the revenue numbers. But they mentioned something very interesting. They're going to have a 2-for-1 stock split. And what that means, folks, if you're new to investing, so Google's trading up there around 30-ish. Google is trading, about 624 closed at, so it kind of slid down in the close there. So divide that by 2. It's kind of a mental thing when stock split. It really doesn't do anything for the stockholder, and we'll get into this in some future lessons here at WCI. So, and you can see here that we actually faded this rally. Let me take a look at Friday. What happened today? You know what, folks? It ran out of steam. So we had what we call, let me go out back to our 5-day chart here. We had what we call get rid of these real quick. We had what we call a relief rally here. So Wednesday, after the close, the market capitulated and said, you know what? And this is what we term a relief rally in the business. Nice. And so in 2 days this week, we had the biggest point gains and the biggest losses that we've seen in the market in months. So it really was a whipsaw week. So after this rally, 2 triple-digit days of gains, this kind of faded. So let's just show what happened on Friday today, and it just kind of ran out of steam into the close. And you can see it, from 3 o'clock on, we just sold into the close, and which is never a good thing. But going into a weekend with no conviction, not super volume, so it's not like it's world ending, but there's some problems on the horizon. Again, we closed down the week, $136 on the Dow, the SPUs down 17, and the Russell, Nasdaq down 41. So what's this mean to us? Well, as investors, as traders, we kind of have to have those Marty Feldman from Young Frankenstein, kind of those googly eyes. One eye looking downrange and one eye looking at the near term. Near term, as the chief market strategist here at WCI, I'm bearish. Got to be bearish, folks. The jobs numbers for the past couple years, the first 2 to 3 months out of the gate, we've seen good unemployment numbers. And each year for the past couple years, it's always been, yay, we're out of the woods. Epic fail. And the rest of the year is just choppy and tough to follow. But great to trade. Don't get me wrong. I love choppy, especially as an options trader. The more choppy, the more volatile the market is, the more options premiums will be, and the more money we can potentially make. So we'll get into that. If you want to learn more about options, definitely take a look at our options channel. But a lot of positions in a model portfolio I manage over at Top Gun Options are hedged for that longer term picture. For example, gold. Gold is a flight to safety, folks. As the Fed chief, Helicopter Ben, says he's going to keep monetary policy loose until 2014, that's just the dollar. It's almost like Weimar Germany, where people are buying loaves of bread with a barrel of dollar bills. The dollar is just under pressure, so precious metals are an area to be looking at. We have a trade on right now. It's kind of red, but on oil. A longer-term trade on oil for the summer driving season and a hedge against a potential strike against Iran by Israel. So, like I preach over Top Gun Options, if your portfolio does not look like a Christmas tree or the Missile Command firing board of a nuclear submarine, you're doing something wrong. Because if it's all green or all red, you're not hedged. And this brings a smile to my face. A little more red, obviously, than green, losing $32 in the model portfolio today. We can find that in our couch. I'm going to drink that at the Panthers game today. But everything's looking good. We had a great trade on Google. It was about a 2-week trade on earnings, and we've made, close to the full credit, almost $2,100 in about a week and a half, 2 weeks. So that was some nice work on Google, and we're going to look to that some more. But really what happened today, let's go back to the chart, is early this morning before the market opened, JP Morgan and Wells Fargo came out with earnings before the open, and that kind of set the tone. Wells Fargo has an albatross of the housing and bad mortgages, and they just have an albatross around their neck. They have a speed brake sticking out of their jet. JP Morgan, not so bad. The financials aren't going to have a bad first quarter. Well, the ones who don't have mortgage exposure, like Bank of America or Wells Fargo, have tons of mortgage exposure. The ones who don't, like a JP Morgan, a Goldman Sachs, their trading operations, their trading arms printed money in the first quarter. The first quarter, the markets were up about 12%, and unless Goldman Sachs literally fell out of bed and hit their head and completely lost any notion of how to make money in the first quarter, we're probably going to see some good numbers next week when Goldman Sachs reports. So we kind of have a trade that's not looking so hot right now, but that's mainly because today, like I said, the financials went down on the Wells Fargo albatross and the not superior news out of JP Morgan. But this, Goldman Sachs trade we have on right now is an earnings play for next week. So where does that leave us, folks? The next unemployment report is definitely going to be critical. Are we continuing this downward slide, or are we going to find a base and keep going up? And as you're going to hear me preach at WCI, folks, this market is being held skyward by the not-so-invisible hand or gentle hand of the Fed. Let's just take a look out, let's just call it 6 months, folks, and take a look at this escalator. That's nothing but the Fed, folks, buying debt and saying we're going to keep everybody happy. Because any of you listening to my voice probably know people who have lost their job. You might have lost your job. They're upside down on their house. It's ugly out there. And you're probably sitting there wondering, well, how are people making money in this market? Well, that's why WCI is here, folks. We're going to help you understand the ins and outs of the market so we can help you potentially become a better trader, more confident trader, and in the end run, a more confident and profitable trader or investor as well. So have a great weekend. Again, it was a whipsaw week. Monday is going to be very interesting, so make sure you tune in on Monday for our market brief on the week ahead. I'm Matt Buckley, the Chief Market Strategist here at WCI. Have a great weekend, and I'll talk to you Monday.